I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. We've got four markets today: December corn, December Chicago wheat, February live cattle, and February lean hogs. To kick things off, we've got December corn pulled up here, and this is something we talked about in last week's Tech Talk. We talked about this trend line coming in from the August lows being significant support and psychologically significant support below that at $4. We tested this and held that, confirming yet again higher lows and keeping that path of least resistance higher. Now, we've made higher lows. Will we make higher highs? That's the big question. I am not so sure that we will. We certainly could, but we were playing it to the short side here today above that 420 level. 420 has been a big area of headwind for the market over over really the course of this contract's lifetime. You could go all the way back here to the summer of 2018, the summer of 2019, and again more recently. Sure, we did get out above there and maybe trip some stops, but weren't able to get a conviction close to keep that momentum rolling northward. And the other thing that has us kind of at bay is the size of the fund's position, which is still rather net long. They were net sellers last week for the first time in the last 14 weeks, which should be a little bit worrisome to people who might be overly optimistic the market. I think you're going to want to temper those expectations, because if we see the funds start to trend in the sell side, there's a long ways to go. It could potentially see some pressure and some headwinds certainly come into the market. If we get out above here with any sort of convictions, we'll take our medicine and move on, but we like leaning on the sell side here north of 420 in the very near term, especially with option expiration here at the end of the week. Now, moving over to December Chicago wheat. This is a market we also touched on in last week's Tech Talk. In our morning reports, we talked about the head and shoulders really for the last several weeks forming. We also talked about this 580 level being significant support and a spot to reduce, looking to resell a rally to $6, which is what we got here over the last 2 days. There's trendline resistance from the highs as well. And as with corn, this is kind of one of those things where if we get out above this trend line resistance with any sort of conviction, we'll take our medicine and move on. It's okay to be wrong. It's just a matter of how long you stay wrong. So we continue to like the sell side in Chicago wheat. A break and below this trend line, I think, would accelerate the selling, take us a little bit closer towards that 580 level again. And I think with time we can break that and trade quite a bit lower for this December Chicago wheat contract. So as far as the conviction rating goes, it's probably the highest on the sell side in Chicago wheat. Corn, I like the sell side, maybe not as aggressively as wheat. Soybeans, it's a total coin flip. We could go higher, we could go lower. I really think there's probably 50 cents of risk on either side of that trade. So staying relatively clear on that one, as we've had a neutral bias in our daily grain express. Now, moving over to the live cattle market, we've been writing and talking about December for quite some time now. The volume has shifted out to February, and you're going to continue to see that be a bigger trend going forward. We were optimistic December live cattle and continue to be optimistic live cattle in general. This February contract is a little bit different on the chart. Doesn't have that clear-cut gap that we saw in December. And there's still quite a bit of support down here that we would love to be buyers at. I'm kind of hoping we don't retreat back here to 111, but if you're bullish the market, you're going to want to be ready, willing, and able to buy a pullback to that level. So I think that's where you can really load up in terms of a risk-reward trade. And eventually, I'd like to see a retest above these August and September highs, a breakout above there. And this thing's got room to run all the way to this gap back here in February, which comes in closer to, let's get it there, about 120. So that's what we're looking at for the live cattle market going forward. Wrapping things up with lean hogs. Lean hogs we've been pretty pessimistic on. And we've been writing about December and talking about December in the daily reports. But again, the volume is shifting out to February. So that's what we've got pulled up here. You see kind of a downward trend forming, lower highs, lower lows. We held trend line support right here recently, but I continue to think we can retrace this breakout point, which is a little bit closer towards 62.75. We're looking to resell rallies upward here towards 66. 67 area, breakout above this trend line. As mentioned with some of the other markets, take your medicine and move on. The market will be here tomorrow. the next day, the next week, the next month, etc. It's about kind of cutting your losses early on. So if that's what we're looking at, that's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade. Remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.